Good morning, everybody. Thanks very much for joining us. Really interesting session this morning, focused on the European outlook for 2021. Great panel here with Thomas Veith, Nils Hübener, Iryna, Pylypchuk, Assem Alami, and Carsten and Sami Vetrak. So really great session here. Let's just start with you, Thomas. Just a very kind of brief introduction, just of yourself and the company, and then we'll go around everybody, and then everybody will know who everybody is. Thomas, let's just start with you.
Yeah, good morning. My name is Thomas. I'm partner at PwC in Frankfurt. I'm leading the real estate and real asset industry here in Germany for PwC with 450 people on the ground in Germany, supporting our clients on everything: digitalization, transactions, ESG projects, of course, tax structuring, auditing of real estate investments, if it's a loan or an asset or real estate corporate. So that's everything we do here in Germany.
Great, thanks very much. Nils.
Yes, good morning. My name is Nils Hübener. I'm CIO and board member of CORESTATE Capital Group. We are an integrated investment manager, actually ranging with services including classic investment management, but also a couple of specialized property managers across Europe. There's a quite strong focus, while we do all sectors, strong focus on residential and micro living, including student housing in our business. I've only started and joined in this group in the first lockdown, effectively. Was the global CIO for BNP Paribas Riem before, and before worked for SEB Asset Management and Deutsche Bank Real Estate. Many thanks.
Perfect, thanks very much. Carsten.
Good morning, my name is Carsten Loll, partner at Linklaters, one of the leading law firms. And I'm a transactional lawyer, and I keep my insights and information for the later discussion.
Great, thanks very much. Iryna.
Good morning, my name is Iryna Pylypchuk. I'm Director of Research and Market Information at INREV. INREV is European Associations for Investors in Non-Listed Real Estate, and it's really a leading platform for knowledge building and building transparency for the industry by providing insights into data, forward-looking papers, data quality, standardization, guidelines. It's really all about building transparency to make non-listed real estate more attractive and accessible for investors. And that's the mission of INREV.
Thanks very much, Iryna. Samuel.
Samuel Vetrak, CEO of BONARD. We are research and consultancy for student housing and rented residential asset classes. Based in Vienna, team 50 across the globe. We help governments, investors, bankers, developers to better understand the market and provide data for underwritings and investments.
Perfect. Thanks.
I'm Assem Alami. I'm head of origination with Berlin Hyp. Berlin Hyp is active in Germany mainly. 70% of our business is German. We're also present in the Benelux, France, and Poland, and one of the other times we have financed assets in the Czech Republic.
Maybe let's just start with you, Carsten. Obviously, we regularly do these outlooks on around Europe, traveling around Europe, and normally come to Frankfurt for this. So I suppose, how do you see this year, and also then how do you see that moving forward into 2021, Carsten?
I think in terms of our industry and the business, and I think that's the question. We need to be positive, and we should be positive, because when we would all be back in March, we would probably expect it to come much harder and worse than it actually happened. There is still a transactional market. There is still, as Thomas said, strong interest in the asset class. We come to that later, possibly, that there's still, I think, demand for offices, and people start to, especially now in a second lockdown, whatever it is, they strongly feel, and the more you talk to the younger generation, the more you feel it, the need to go somewhere, to meet someone, to mix and mingle, and to speak and share. So I think that, yes, we have technology and it works well. And yes, we had a okay year for everybody because there was ongoing transactions, but that there is this need to get somewhere and to do something. And I think that if we get a vaccination later this year, early next year, and we will really all get it done, then I think there's a positive outlook for next year, because all that energy will go somewhere. And I always say I want to be in Berlin for the party once this is all over. And I think that is true for the industry too. So I think there's a positive outlook, and this year wasn't as bad as we expected it to be. However, it wasn't good either. So I think that's possibly a fair summary.
Okay, great, thank you. Nils, maybe coming to you, just in terms of CORESTATE Capital, I suppose, have you adjusted in terms of either your pan-European strategy or your strategy in Germany, but also just the realities of the market over 2020?
I think we have. In picking up the points that Thomas was also mentioning, obviously we are operating against a background which is very, well, it's really cut into two parts. We have, I think, and that's the good news, and I think that's also what Carsten is referring to in terms of the positive outlook. I think we are operating in an area that is in demand. We are in a business, in an industry that is actually, to a certain degree, may even be kind of benefiting from a further shift into this alternative corner. While this is happening, and it's great, obviously we also have to see that we are not immune from the real world, and that I think, even though a lot of the effects of the crisis have been cushioned to a certain degree with a lot of money that we still have to be paying back altogether at some point. But it's actually cushioned it a lot. But still, we will and are seeing there obviously are impacts in the real economy. And I think there will be more of these next year visible. So, I mean, that's also impacting obviously on investors' demand, and it's impacting on us as an investment manager. What do we offer and how do we work for our clients? I would probably there say on one side, clearly, we have even more shifted our focus into the core and core plus area. We are traditionally also very active in value add, and it's something that obviously is of lesser interest at the moment. So there's quite a bit of risk averse dealing at the moment, and we have reacted to that in our offering. So a lot of the deals that we have done in 2020 are on very long-term leases. There's quite a high proportion of public tenants, and also we've traditionally been strong, and that's benefited as well in residential and in residential related assets that are also in demand. The other area where we are reacting is even an even stronger focus on very close, client-related asset management, because I think that's the other key area of attention for now and also for the next year.
Okay, perfect. Assem, I just wanted to come to you in terms of the broader economy, the macro picture. Obviously, that's something that everybody has to monitor, but especially the banks. So what's your sense of, I suppose, the macro picture as it developed over 2020, but also particularly looking to where we're heading in 2021?
The macroeconomic framework is probably known to everybody. We've seen quite a severe recession movement, minus 6.5%, I believe, for Germany. But then again, we look at, some might call it a V-shaped curve, some L-shaped curve, whatever it is, whatever letter you mentioned, will probably recover in 2021 around 4.5%, something around. The last 2%, that will take a longer time and until we recover that. So I'm not an economist, but I would think we'll still ramp up those 2% in 22 and 23. What does that mean for the real estate industry? Actually, it's as always, I think the demand in real estate industry will be a little bit tempered by cost cutting in companies, by a lack of visibility so far, by hesitating on decisions. But once we've got the vaccine out there, then I think then companies might get a little bit bolder again. That's of course the issue for offices and for the consuming index. We've seen that the consumer index has come back, and there is willingness to spend money on, but then again, online or in stationary retail. And I think all the questions that we had on the retail sector still subsist, and we will still be in a sort of a limbo. Where is retail going for quite a while? That is speaking of a non-food retail. When it comes to the convenience retail, I think that's the clear, for me personally, it's the clear winner of the situation, more than logistics. Logistics is the crisis has shed some very bright light on logistics, but then there's always also has been some shadows on others, logistics which depended on the automobile industry, or logistics that are dependent on the retail sector, as mentioned. So, and then of course the residential. I will not go into the residential sector because that's perfectly stable. So what does that mean for us? I think the banking sector has not suffered severe damage. So if anybody in this around this table, around this virtual table, is expecting NPLs to come onto the market, I don't see a wave of NPLs coming on the market, and I would have to disappoint all these expectations. But what we'll see is probably that banks will have a greater consumption of their equity base by risk rising a little bit, and following the model that they're adopting, following the portfolio that they have on their books, there will be a little bit more or less equity available, bank equity available to allocate to lending. So mechanically, that would mean that margin should go up, but there is still a whole lot of pressure on the banks producing loans, and so this expectation might be countered by the fact that everybody's pushing into the same kind of assets, as Nils just pointed out, to very risk-averse assets.
Okay, good. Thank you, Assem. I'll come back to some of those things. Iryna, I just wanted to pick up with you. Obviously, INREV both picking up the trends from the funds side, but also kind of data in terms of performance. What analysis have you got in terms of the performance over this year? I guess for Europe, but particularly also looking at Germany, and any key trends that you're seeing.
Actually, today we're just releasing our Q3 INREV fund index. So it's very fresh, and it's the first quarter after the very negative performance in Q2, where the total returns are back into positive territory again for Europe. So the Q3 return for European funds is 89 basis points effectively, and that's up from minus 67 basis points last quarter. So that already provides a little bit of a relief in terms of where the sentiment is going, and echoing what both Thomas and Carsten were referring to earlier. If you dissect that a little bit more and look into differences between single sector strategies or single country strategies, Germany is clearly leading. So in terms of single country strategies, Germany has delivered a performance of 1.82% this quarter. And whilst all European countries have also returned back into the positive territory, apart from the UK, it's significantly ahead of most of the other markets. I think the peculiar part is that it's the fourth quarter of consecutive increase in capital growth. And I think that's perhaps a little bit of a function of German valuations But equally, I think for me, a strength of investment market, is always anchored on two key points. One is the strength of local institutional investor base, and two is the income return and steadiness of income return as a proportion of performance. And on both of that points, Germany strikes very strongly, and I think that's why it's very well positioned in that respect. So even when we have Asian capital or American capital taking a pause and reassessing their allocations whilst the travel ban continues, that German market has the strengths of local capital to continue to have that sentiment and quite a strong allocations to the sector. So that's one. I think also important to mention that actually we are looking at releasing our German vehicles index next week. So I can't give too much information, but if I look at the performance of both Publikum funds and the Spätzle funds, again, it's that steady performance. Of course, Spätzle funds are stronger in terms of total returns just by the nature of their industry. But again, if I focus on German strategies versus European strategies, excluding Germany, the difference is quite marked. It's about 80 basis points outperformance when focusing on the German market alone. I think we need to keep in mind a couple of things, and compare and contrast the current crisis with the previous crisis. I think it's important, because I think what happened with the global financial crisis, because it was capital markets driven event, effectively, things have happened quickly or relatively quickly, and then started to correct quickly as well. I think what is different this time is that it's really a bottom-up crisis, and I think the impact on the economy, on sectors of different subsectors of the economy and our tenants that we are so keen to get our high income return from will be very different. Will take a long time to feed through, and it's quite difficult to understand fully until perhaps we are a bit further down into 2021. So I think we as an industry, it almost doesn't matter if it's direct, non-listed or listed segment of the real estate, need to really spend more time understanding our tenants, their operational models, their margins and affordability. And that's something that we don't do enough, but we should.
And Samuel, to a certain degree there, you're at, and Nils actually as well, but you're at the sharp end of that in terms of looking at student housing and also beginning to look at senior living, micro living, where those really are operational businesses. We're at the sharp end of. Has that proved more resilient? And I suppose, how do you see the continued rise of residential in terms of the research that Thomas was picking up? Is that due to resilience, or is this simply that these asset classes are beginning to be more attractive in terms of income returns?
In context, what Assem mentioned, that residential asset classes have done probably okay or better than other asset classes, and both student housing and senior living are part of this family of asset classes. Also, rented resi has been doing better than others. To our statistics, student housing occupancies have been hit by about, in average, 10% during this last 9 months. But Germany done extremely well. So the occupancies went down in average from 98% to 95 to 97%. Many students return back to their study destination that they consider their home base, where they have friends, social networks, jobs. So they are there even though the studies are online. So there's a very strong resilience of this asset class and this target audience, which confirmed the defensive counter-cyclical nature of this particular asset class. And we see an increased interest of investors. So not only students are in strong demand, but also investors seeing this defensive counter-cyclical nature. And we see an influx of more institutional and American investors, especially being interested in Germany. Germany does not necessarily deliver the greater returns in Europe. The yields are low, and it's difficult to grow margin, but Germany offers scale, track record, mitigated risk. So that's why we see an increased interest of these institutional American investors, more, probably 40% more than last year. And Germany was the number one continental Europe market for student housing back in 2017-18, but the focus shifted more to Iberia and France. But it seems like what COVID did to this market is that it's shifting back to Germany or German-speaking world, because Austria and Switzerland are also performing very well.
First of all, Samuel, I think we seem to be using the same research, so I'll share your positive view on the sector, obviously. I think that the two things to say. I think obviously there's a difference for the student housing sector in terms of impact, in terms of the proportion of international students. So I think a lot of markets, I think Samuel, as you rightly said, this is often more local. This is actually often the primary residence. Maybe something that also has been evolving in the last couple of years. We also have a lot of non-students actually residing in student homes in Europe, not so much maybe in the more university-focused areas in the UK. So I think fully agree. There's a lot of interest from the investor side. Yes, there's been a slight decline in occupancy rate, but overall this is still in the mid to high 90s through a crisis like the one that we've seen this year. So I think we have that interest not just in the German-speaking countries, but also for Iberia and Italy and Poland from the investor base. There is, I think, a recognition that it's a sector that is supposed and should be benefiting. Usually in a crisis, people tend to rather invest in their education. The job market is going for a higher proportion of highly qualified jobs. It's not just the crisis, but it's also the ongoing digitalization and other structural trends. And I think they're all supportive for that sector. Yeah. And for classic residential, I think for Germany, it's in the end, it's still a matter of actually building the flats, especially in the mid kind of rent level, that are required. It's still a catch-up in the end. Even after a couple of years of high production, we are still in those years producing less than is predicted to be required, and not just in the big 5-7 centers, but in many towns that are going to be growing in terms of residential demand over the next couple of years.
Thomas, I just wanted to pick up with you on some of those sectors whilst we're in that topic. You've obviously got, you mentioned it yourself there, that there's life sciences, that there's data centers. And I noticed also that logistics had been split into logistics and then warehouse and industrial. I mean, one of the issues, I guess, is that although people may be enthusiastic about this, that there's actually not a huge amount of product in some of these areas. So does that mean people should be expecting the amount of product to grow, or expecting a deep frustration in investors in not being able to access the product, or maybe that prices will rise in these particular assets?
Yeah, it's a bit in the middle, I would say. Yes, it's on one hand, you can't invest, 10 billion in data center in Germany because they just doesn't exist. But these, I think, asset classes pick up some themes and trends we have in, for example, North America, in Asia Pac for a while now. If you pick data center, you have significant large data center REITs in the US, in Asia Pac, and we don't have something like this in Europe. So it's more like a trigger that we might see some further development to grow European German-wide platforms for data center focused on, or REITs or listed entities focusing on data center. We don't have it. So that's something. It's the same with life science. it's an industry which is simply not developed. And if you talk to the big investors like Blackstone, they would say, yes, we have a life science strategy. And if we go into parks, if you want to invest into a large new theme park, not theme parks, but like life science, I would say, yes, life science is high on our agenda. And this week I saw an announcement that, can't remember the name, that one investor have now started a fund with 1 billion especially for life science. So yes, it will still be a niche if you compare it with office, residential or retail, but it's a grown segment which will develop in a more professional way compared to markets outside of Europe. So that I think a key trend, and there will be some significant amounts like logistics. If you remember 10 years ago, or industrial, it was also a fragmented market. And if you now look at the deal flow into Germany and into Europe, you see a lot of 500 million, 200 million deals flipping around. 10 years ago, everybody would have said, it's not a market, it's pretty granular. Or the same with student housing 10 years ago. It was pretty granular, and now we have a pretty well developed market like with players like CORESTATE focusing especially on this theme. So that's something we will see. Will it be the majority of investments flow into data center in 2 years? No, I don't think so.
Carsten, I just wanted to pick up with you. Just on the capital front, you're obviously seeing some of these flows in terms of interest coming in. What are you seeing at the moment? Does that reflect what you're seeing?
No, it's very true. I mean, Dwight, for example, larger transactions for Union this year, and the counterparties were sort of German as well. So this is indeed the trend. And yes, it is the travel restrictions which are cumbersome for the investors, especially the Asian investors. They just basically want to see it. You know that they come in large groups and visit the offices or whatever that they want to buy. So that's basically impossible, actually, because we are a risk area for them. Because they are far ahead in terms of where they stand with COVID. So that's basically impossible. And what I experienced over the last months is that you still need to sort of see people to at least have one bigger round of negotiation. Otherwise, things get lost in Zoom or somewhere. We all get used to it, but it is still not the same. And especially if it gets tricky and complicated, you want to be in one room face to face because you know they're not recording it and there's no one else and whatever. And because we are used to kind of negotiate physically, basically. So I think that was, and for the due diligence, you need to, I mean, maybe not for the legal part, but for the technical part, you need to go there and you need to see it basically before you buy it. So this is why it was really a German market this year. However, on the single transactions, there was always strong demand. So it was basically the same as before. And it doesn't really matter whether there's 20 bidders or 30, you don't feel that. I mean, if you're one of them. So the demand was as strong as before, and I must say, yes, there was a bit of negotiation and maybe in the first lockdown in the crisis, but since then prices have recovered, so it is as before or even more expensive. So there is enough capital within Germany that can kind of make the market. To be honest, Germany means, I think Thomas said it in his presentation, it's the meaning of having people on the ground. We are not back 20 years ago in a national market because there's like LaSalle, whatever, BNP, all these CORESTATE is actually, so the money comes from different locations from other places. So it's an international market, but you need people on the ground. So whether this is then German, I would doubt it, but German people doing the work.
Assem, just wanted to pick up with you a little bit more in terms of what you're seeing for the financing markets more generally in Germany, and also because I know that there's a big focus on sustainability within the bank. Just wanted to pick up because obviously we've seen that growing over the year because there's been less flights, more of a focus on low carbon. Do you expect that to continue? So just that financing point and the lower carbon side. Okay, good. And Thomas, because I know you've got to go in 5 minutes, so I just wanted to pick up with you from your point of view. if one's looking at investing, particularly in Germany, let's say, what are the key, what are those trends all telling you? I mean, what does that mean from your best judgment about the investment scenarios in Germany, particularly?
Well, I would go to the general trends where Germany, or where every investor has to look at. I think we mentioned ESG already. That's something where, if you are going or investing into the German market as well in the EU, you always have to think about who will be your future tenant, who will be your investors if you want to exit the property in 3, 5, 7, 10 years, whatever. So ESG should be really on the topic, also around financing and insurance premium. It's a big issue. Then I would say for the general organizational point, digitization is something where our industry is far behind other industries. So that's something where we all should more focus on, because we learned from COVID. We manage it somehow pretty well, but our core business is still not digitized, and there are so many efficiency potentials we are not touching yet. And I think pressure will remain on our industry, as we had fantastic 10 years. But looking ahead, I think there's something more we could do. Then one of the big macro trends is, of course, focusing more on local operations. So that coming from the discussion around trade wars, etc. So we will have a shift in supply chains that will trigger industrial, that will trigger logistics investment further. So that's the theme around that. And of course, we have to focus on what's the new office concept. Yeah, what's the new work concept? Also, let's say, compared with the digital trend. So it's both things. And Occupy, I have to think about what's my cloud solutions I can offer my employees, and on the other hand, what do I do with my real estate? And that's something where we have to focus on where the trends will go. I'm not so negative on office as I hear from some market participants, but there will be a significant transformation, I think, for the next 3 to 5 years on office concepts, which will also trigger investment needs. Might be a joint venture of tenant and landlord, of course. But these are the 4 trends, I would say. Looking on the office side and the new office concepts, the relocalization, or changing of supply chain, triggering industrial and logistics, ESG, of course, and the digitalization. These are the 4 trends I would send, which we should reflect in our investment strategies.
Okay, good. Nils, I wanted to pick up with you. I mean, one of the other things that's been coming out, both in the sessions that we've been running, but also the ones that I was running at MAPIC, for example, that kind of blending of sectors in a way, particularly when you're looking at an urban area. And I know that CORESTATE, for example, has focused on that sort of city quarters idea, which in a way is picking up on this blended theme. Do you see that being accelerated by the crisis? What's your sense of that, or is this just more to do with how people want to live?
I think there is obviously longer term structural trends that are supporting mixed use, urban, integrated. Both from an end user point of view, because as you just said, I think it's how people have over the last couple of years learned and changed to understand that they actually benefit and want to have. I think Anne Hidalgo, the mayor of Paris, kind of called it the concept of the 15-minute city. That within the concept of a very large city like Paris, if you break it down to smaller places, then you're probably more to a couple of minutes. So people have learned and changed their expectation that they can be doing a lot of things they do need to do in their daily life within a short distance from their home, or even in an integrated way. So I think there's that underlying long-term trend. And then there is obviously an acceleration that we have seen, I think, through the crisis, where this kind of home focusing has obviously received another push. And yes, there's also been a certain back to the countryside, but I think there's the strength of the urbanization demand, and then being able to fulfill your requirements nearby is, I think, a major push again through the crisis. And then there's obviously the recognition as well on the investor side that that this is not only supported by long-term trends, and this is actually giving you a robustness going forward that is higher than if you are focusing on single sectors that may be under structural change pressure. So we have seen quite a lot of interest. Recently acquired one of the larger projects here for over 300 million in the lockdown in Nuremberg. The demand on the investor side for that sort of product is clearly there. And the production is there as well. There's in Germany alone, there is a couple hundred of these urban quarter Stadtquartier projects in the pipeline. So yeah, we see that as a long-term asset class evolving.
I just wanted to pick up with you, Iryna, if I can. We've had a lot of topics here: ESG, mixed use, different trends. Is there anything that you're picking up particularly from INREV? You mentioned there the operational real estate side. I suppose, what else are you seeing that the I suppose, are forward-looking trends that we can look to for 2021 and beyond?
Well, I think it's mostly the things that were already mentioned. If I think about COVID, I feel that in a lot of ways it actually accelerated some of the existing trends. And I think I've noted down about 4. So that's the shift between retail and industrial logistics and the last mile. I think the flexible working was already happening. And if you look at the Eurostat data, you can see how it's been increasing. It was very steady, but that's now been kind of pushed forward, so to speak. I also think that shift from investor demand to operational real estate and to seeing real estate investment not as just an asset, but as a service is a big theme. And I think it's a long-term theme that touches across all of the kind of life sciences, residential, all the kind of more niche private rented residential and student housing as well. And of course, the ESG. I think on the operational side, there are a few things that I think is really important drivers, and they're here to stay, is because, you know, the investor demand has been increasing. Actually, the INREV data, we did a large report on the operational real estate in September, and it showed that over the last 10 years, there has been significant increase in interest in allocations to operational real estate, and that includes residential and all the niche segments that we've discussed today. And it's actually outpaced the growth of those allocations, have outpaced that for offices, retail, and industrial. And the reason behind it is clearly, you know, it serves an underserved demand of a long-term trends, you know, be it demographic or aging demographic or change of ways of preference to how to live, or technology, you know, digitalization. All of those are emerging trends. And if you want to partake in the emerging economy, the way to do it is via the kind of more operational involvement. And the other strong benefit, and I think it's very timely, is that at least in part, it's dislocated from the economic cycles. So if you're thinking about that, you know, stable income, steady income that you want to make sure it's protected regardless of where the economy is in the cycle, this is the way to go. And the risk return menu, if one put it that way, because you can go in from the kind of lower leasehold perspective to a joint venture to then going all the way into the full holding company. And again, you have much more kind of decision and control over what kind of investment option you're looking for. I think there are buts that comes with it, and that we perhaps did not talk about, is that it quite often requires quite a lot of specialist knowledge, and quite often requires scale because you cannot be a core investor one day and then tomorrow decide to go and participate in micro-living or student housing sector in Germany. If you already have the skills and capabilities, perhaps in residential, transferring that into more niche operational segments is much more easy. And I think that's the tricky part of getting access to that product, but also the long-term requirement, because a lot of that product doesn't exist yet. The good example about the data centers. And the only thing I would add is we need to do more as an industry on trying to share data on ESG, just because, there has been a full shift in the mindset about the ESG requirements, both from the investor perspective, from the tenant perspective, throughout the kind of decision makers, but we have to do more to try to explain the impact on the performance. And if you look at the listed sector, not the real estate, but broader listed sector, there has already been some work done that highlights that actually those stocks that have a strong focus on their ESG targets tend to outperform. And actually, INREV just launched a ESG pilot where we will be collecting asset level ESG data, trying to collate it together into something meaningful, and then hoping to explain what impact it has on the performance sometime in 2021. So I think there's lots to be done for us to work together as an industry in kind of sharing the information and the insights.
Okay, good. I know you've got a hard stop in about 4 minutes, Nils, haven't you? And there was a question that came in actually, which was around smart cities. And also we've got a session on prop tech and innovation tomorrow, so it'd be interesting to get your view on it. Which is, how influential do you think that is going to be, the whole smart cities, smart buildings side of things moving forward?
I think it is influential. I mean, clearly, maybe let's sort of look at it at different levels of say flight altitude. I think it starts really with the whole concept of what are the cities overall that we want to be looking at, and what are the attraction points for us, actually probably more important than just looking at the country level. So clearly, a place, first of all, that needs to be attractive, and then also a good base for further development of the smart city and smart building concept. First of all, it has to be an attractive, open-minded, research-driven, open society place. And I think that's one of the reasons also why people are perceiving Germany as an interesting investment place. Often these cities that are, say, research-driven, education-driven, will then also be offering the best approach and concept and open-mindedness to be applying concepts on smart city guidance and development. And that's to a certain degree, I think that's going hand in hand. For us, when we were talking about the city quarter concept, obviously one of the main benefits of these integrated concepts of the urban quarter and the mixed use approach is actually that you can then also on a building level start to be using technology in a much more integrated way, because you actually are starting with, say, a bit of critical size as to where to apply your technological approach. So it's, in our view, one of the reasons why, if you want to be supporting and advancing in that corner, the city quarters are actually a helpful tool to be accelerating the process. Biggest risks, biggest opportunities. Again, high altitude. I think, in my view, the biggest risk for Europe is debt. Clearly, talking about Germany, one of the reasons why is Germany attractive is actually it went into the crisis in pretty good shape in terms of lowish public debt and an ability to react and actually support a longer term crisis. Obviously, that's not the case everywhere in Europe. And I think that is, in my view, at least medium term, one of the higher risks that we are facing, because all of the money that has been supporting the crisis, yes, will have to be paid back at some point. And it's not going to be easy everywhere. I think a real opportunity for me is actually what's been on the global side happening in the US. One of the major risks, if you'd asked me a couple of weeks ago, I think there's a major risk of a dividing line that is even further driven between the US and Europe. I think there's a real opportunity now to bring that closer together again, which we will all really need also to defend, say, the place of Europe within the global world order. So I think that's a real opportunity, and I hope we're all going to be benefiting from that.
Okay, great. Thank you, Nils.
Sure. Thanks.
Interesting that we hadn't talked about political risk that much because the health crisis has taken over from that. But interesting to see that coming back. Carsten, I also I remember going back over many years, certainly for the last 3 or 4, Brexit has been always mentioned in this session, as has actually the Berlin airport. I'm delighted to see that the Berlin airport is now finally open, so we don't need to discuss that.
And bankrupt.
Well, it may be bankrupt, but it is open. But just in terms of that risk side of things, I suppose what makes you, uncomfortable and what makes you comfortable at the moment in terms of those broader risks?
The US election has shown that things can develop for the better. And hopefully that ongoing misery with Brexit will be a bit similar. I still hope that they will find a suitable outcome and that they find ways to work together. And if you look at the trade treaties that the UK has just signed, they are basically the same as they had before. So no improvement, but not worse either. And I think they should all put this aside, and they should not behave like in a divorce, but they should take it, and they should first let the UK go, and then they should stay as close as possible. And I still hope that they will find a solution. I think the latest developments in Downing Street are a bit positive as well in terms of the personnel leaving and the others staying. So I think there can be a positive development there as well. And yes, I mean, we've probably all learned from COVID as well that we are international. So that virus just spread within weeks from somewhere in China to everywhere. So we need to work together internationally as close as possible in health matters or environmental matters. I think we've just got the proof that this was right, and we should continue. And I think people kind of feel that need to.
Okay, good. I'm going to come to you in a second, Samuel, but I'm going to come to you also for feedback on the question that I've got from Julia for Assem. So, which was, will you continue financing student houses or boarding houses? Assem, so concern around student housing financing. How much is available? And is it something that as a bank you'll continue to finance?
The simple answer is yes. The more complicated answer is, as before, it's always a matter of the single asset does make sense. So to make it very simple, what I'm trying to say is student housing in a small university town such as, let's say, Tübingen, might not be such an attractive project, whereas student housing which can also be transformed into micro-living, long stay, business stay. In Berlin, for example, might be a very good risk to finance. So again, I think we don't have any fundamental issues with student housing, but it's we cannot say it makes sense everywhere.
Okay, good. So, Juliana, you need to speak to Assem about it and see whether it makes sense. But in principle, there is no reason why you're not financing it, which is positive. Samuel, just coming to you. I mean, that's interesting, that point about financing, because there's got to be, I mean, certainly you've mentioned already that there's quite a large gap in terms of the need from students and actually for senior living, and the product, and that therefore means that that's got to be developed, which requires financing. So I suppose, are there blocks in the market in terms of financing, and how do you see that developing in order to be able to match the need?
Definitely, I haven't met anybody in the banking industry. Let me come from the other side, which is not eager to finance residential. So then, if I come back to those specific products, which is student housing and also senior housing, then again it's a matter of how much regulatory framework do I have to work with. Are we in a dense urban area, or are we somewhere out of the boonies, if I may say so? So that it all depends what the quality of the project will be. But I sense that Berlin HIP and our peers, we're all ready to look at a sensible residential products. May they be normal residential or specific products such as student housing and senior housing.
Okay, good. And Samuel, just pick up that point for me in terms of the financing and the route map, I suppose.
I cannot but agree with Assem that the banking community in Germany does not necessarily have a challenge with residential or student housing and senior living per se. It's much more about particular projects, and it's not that easy to develop a feasible project in Germany. It's a mature market. It's in certain cities sort of saturating. It's not saturated. So cities like Tier 1, Tier 2, so Berlin or Münster or Heidelberg and Aachen are good, but smaller cities are not that easy to develop a bankable product in these asset classes. On the other hand, where I see an obstacle are suitable opportunities. There is awareness about these asset classes. Demand is there. I can sort of top up the information on senior housing with senior living. We just completed a research two weeks ago that we publicized with you, Richard, that there are 10 million seniors with 75 years old and more, 1.7 million of them in top 20 cities, and the provision rate is about 4% of assisted living apartments, so 65,000, and only 22,000 of them in private assisted living apartments. So the private provision to beds to senior citizens over 75 is only 1.1%. So there is no brainer. There are more seniors. There are economically stronger seniors. Provision is low and far from saturation. So capital is there both for student housing and senior living, but opportunities are really difficult to find. Central locations are sizable enough. So 7 to 15,000 GBA, square meters GBA. But we see a little bit of a light at the end of the tunnel that 2021 can be a very good year for these asset classes, because as residential is now better positioned to other asset classes like office, retail, and others that were bidding for same plots. For example, in Munich, it was really difficult to succeed with student housing and senior living project. Now it's more feasible. So banking is not such an obstacle, but opportunities, and we are desperately looking to find more opportunities for the capital in these asset classes, and should be more likely in 2020.
I'm just going to ask a quick question to everybody, which is similar actually to Nils. So I suppose, where do you see the biggest risks? But let's not focus too much on that. Let's focus on where we see the biggest opportunities for 2021. Let's start with you, Carsten. I mean, what are you seeing? I know you're originally from Berlin, so Berlin is probably top of the mark for you. But where do you see the opportunities at the moment, particularly in the German market?
I think it is a trend that we had before and got accelerated. It is quality and service, as we said before, and you can kind of put in some of the digital stuff. You just need to produce whatever you do You need to produce something that people actually want and like. And you see that with Apple and you see that with Tesla. Suddenly there is a new product, it's a telephone or it's a car, but people like it better than other products. And the same applies to real estate. And I think we've taken it too easy in the past by just building boxes, basically. So I think that flight to service, quality and digital aspects will be the driver for the future.
Okay, good. Iryna.
Actually, I had a very similar answer. Mine was tailored approach to real estate investing. So it's pretty much what you're saying, Carsten, but even more tailored to a specific tenant or a specific service that the asset delivering. A little bit more unconventionally, I think there is more innovation can be done in the secondary trading space. And I think we had significant material uncertainty clauses. Markets stop to a halt. If we have better mechanism to do and understand secondary trading for non-listed real estate, that would be a nice advantage for the market.
Okay, good. Assem.
Well, Berlin remains definitely a hotspot. So thank you, Richard, for giving me that argument. On the other hand, I think, and that goes in the same direction as my colleagues. I think it is about creating living spaces that are worthwhile, where people want to spend time. Because in the long end, with digitalization, it's no longer such an issue to be in the business area, such as, for example, La Défense in near Paris, if that is not worthwhile staying there. If you have an offer to go to a restaurant, if the office space is agreeable, and if the infrastructure works well, then people also will go there, and that's what we need. We need living spaces that are worthwhile and which are sustainable.
Okay, great. And Samuel.
Oh, I would be a bit more general in a way that I think COVID has speeded up more flexibility. So the overall trend to renting and sort of a lot more flexibility and mobility will actually be increased in years to come. And that relates me to the opportunity in rented residential. We believe this family of rented residential asset classes will be empowered with COVID.
Really interesting discussion there, I think. I'm very much hoping that the next time we do Outlook in Germany for Outlook 2022 or for the second half of 2021, that we'll be able to do that in person. Thank you to the speakers. Thank you to everybody for joining us. But in the meantime, stay safe, stay well, and look forward to seeing you in 2021 in Germany. Thank you.